Okay, Rana Gupta is now joining us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment. Rana, great to have you back on the program. Thank you very much for your time. The US sold off a little bit last night. Is the rally maturing in the US, or you think there is more to go? What's your sense?
Good morning. Well, I think US markets, they have to deal with their own dynamics of earnings. And the view is that the earnings will face some downgrades in the coming year. So I think the multiple has broadly, by and large, adjusted to the new interest rates. We have to see how much of earning downgrades can happen. Our sense is that this earning downgrades, markets expecting somewhere around 10-15% thereabouts. The earning downgrades could be a bit lower than that, given that nominal growths are quite high. But overall, I think it's going to remain range bound with volatile like it has been for last few months.
Rana, morning. Everyone's watching the China COVID protests, and what direction will it take from here? Is there a chance that this could escalate into much bigger, which will challenge the current authority, or do you think it will be quietly suppressed and therefore things will be back to usual as it was, say, a week ago?
Look, I think China and their COVID and the response, something we have been discussing throughout this year. And frankly, none of us are any wiser on that. So I think we would rather focus on the long-term fallouts on the emerging markets because of the situation. And one of the fallouts which we can see with some degree of certainty is the restructuring of the supply chains, which means that the global multinational companies incrementally they're putting capacities outside China in countries like across emerging markets, whether it's Mexico, Vietnam, India, Indonesia, and we will be pretty optimistic on that trend. And coming to India, I think thanks to the reforms that has happened in manufacturing, in tax reforms and other things, India can be a good recipient of that friendshoring or restructuring of supply chains.
Hi, Rana. Good morning. I recall when we chatted last, you were a little bit cautious on two factors. One was we're celebrating that interest rates will get pulled back maybe too quickly in comparison to what it could likely be the case. So what are you factoring in? Overnight you have some commentary that says maybe in 2023 as well, there'll be no interest rate cuts. What are you factoring in from here on in terms of hikes? And also on the Indian markets, you said that there will be revenue growth, but the profitability may not grow that much. So for the Indian markets, what kind of earnings growth are you factoring in?
Sure. The first part of the question on the interest rates, I think the market's expectation of US interest rates has gone up to something like, let's say, around over 5%. And that's why I said that the market expectations are pretty much aligned with what we think and what Fed thinks. And the rates have gone up very fast. But that high rate is now done. Now the question is that how longer this high rate will sustain. Our view is that somewhere in the H2 of next 2023, you will see some rate cuts as US growth tends to slow down. So I think that's the view on the rate side. Okay. It's clearly peaked, but I think the cut is some time away. Regarding Indian markets, yes, the revenue growth is going to be quite strong as we have seen, and that's a function of high nominal growth and the banking and the industrial growth that you are seeing. On the margin side, I think we will get a very mixed picture. So margin side will get a very mixed picture. What will happen is that for companies who has a lot of spare capacity, they will have some volume leverage to offset the margin pressures. And in this kind of environment, we have to look for companies which has very good cost control and which can offset their margin pressure. So I think one of the key strategy I would like to highlight is this. Over the last 10 years or so, it was all about buying quality companies with pricing power. Now, I think next few years is going to be about buying companies with very good cost control or having a lock on the cost due to historical holding of assets or something like that. Because the revenue line is going to do well because of inflation anyway. Companies having cost control can outperform because their margins will not as much under pressure as the rest of the market. So I think it's a both opportunity, and for some companies it's a threat also. But I think there are enough opportunities out there as well.
Rana, very briefly, if you can tell us in your portfolio, what are you most overweight on and what are you very underweight on? And at the margin, what would you look to do in terms of making changes?
Right. So we can share about our views on the sectors. The two most sectors where we are most positive are industrials and banking. Industrials is going to, due to the fact we shared earlier, that we are bullish on the restructuring of supply chains and also the domestic capex scenario in India. So industrials, particularly in the areas of auto ancillary, in chemicals, in capital goods area, we are quite positive. We like the large cap banks also, because I think the credit growth is quite strong, cost picture is quite good, credit cost is not a concern at all. So I think the large banks will continue to deliver very good numbers. So banks and industrials, also real estate, because I think the real estate sector is picking up after a long time. So these are sectors that we like. At the margin, we would be a bit more cautious on, let's say, something like when I say consumer, it's not all consumer companies, but there are many consumer companies who have the very volatile input prices. So I think the margin scenario there, we would be a little careful. It's not like a blanket bullish or bearish thing, but I think any company which has margin pressures, i.e. the inputs come from, let's say, energy linked or metal linked, we have to be a bit careful over there.
Rana, we'll leave it at that. Thank you very much for joining in. That's Manulife, bullish on India's industrials, large banking stocks, as well as real estate. A bit cautious on consumers, where the margins have been, or historically have tended to be a bit volatile. Get into a break. Up next, our list of top 10 stocks is lined up.